Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Awesome. Hey, everybody. Welcome back to the show. I am here with no other than Toni-Ann. I'm really excited to speak with you, Toni. Toni has been a mortgage officer, and she currently works for Cardinal Financial. And she has a lot of very interesting things that she would like to discuss with you guys on this podcast. So I'm really excited to dive in. So without further ado, Toni, welcome to the show. How about you just share with the audience a little bit about yourself, your background, how you even got started in the industry, and just ultimately how you got here?
Yeah, cool. So my name is Toni-Ann Fischetti. I'm a licensed mortgage banker with Cardinal Financial. I am personally licensed in New York, New Jersey, and Florida, but Cardinal is a nationwide bank, so we can write in all 50 states. I've been doing this it feels like my entire life. I've been doing it for 15 years outside of waitressing and bartending when I was a kid. This is really the only thing I've ever done professionally, and it really landed in my lap. No one grows up and says, I want to be a mortgage banker, but I was a single mom, and the opportunity opened at a large national financial deposit institution that also does loans. And they hired me as a branch banker, right? Opening checking accounts and that sort of thing. And you got referral credits for referring to the professional services in the branch, the financial advisor and the loan officer. And I just really took to my relationship with the loan officer because it was an easy handoff. Hey, your rates back then in 2010, high rate was 5.5. If you could get out of a 5.5 and into something lower, it was great. So it was just a soft introduction. Hey, your rate's pretty high. Why don't you talk to our loan officer? And I did that for about 9 months before I realized I can identify people's needs and I can sell the deal. So I transitioned into getting my license and not opening checking accounts and just writing mortgages. And it really was sink or swim, right? I got this baby at home. I got to make this money, and I need to learn my product, my trade, and my craft to be successful. So I just became essentially a product expert. And that's where it all started.
I love that. That's the story right there. It was almost like you said, sink or swim. There's no other option. That you have to make this happen.
Correct.
Right?
There was no other option, right? Because other than that, like I said, I was waitressing. But you can't really raise a family or sustain on that. I had just gotten my undergrad, and you're like, well, now I need a big girl job. And this job at the bank opened, and here we are, right? Still doing it all this time later.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I love it. That's incredible, Tony. Thanks so much for sharing. That's awesome. So how about we talk a little bit about, what are the biggest challenges, first-time home buyers face, and, what kind of steps should they take to prepare financially before applying for a mortgage, right? I know you work with first-time home buyers, so what would you say about that?
It's a really difficult market for first-time home buyers. We're in a high rate environment. But I think the bigger push is inventory and affordability. There in my market where I live, there's like 600 houses for sale. And we are, our neighborhood, the part of New York City that I live in, there's 500,000 people living here. So there's 500,000 residents, 600 houses for sale. Super short on inventory. So we don't have a lot of options to choose from because the inventory is not there. And that just drives the prices up, right? That's just how supply and demand works. So average home price in my area, we're over $700,000. Yeah. And there are a lot of metropolitan markets where that is the big barrier to entry, right? Home prices. San Francisco, I think the median home price is $1 million.
No big
So
deal. Yeah, right.
right, and I'm in New York City, and I
Right.
understand that this is a lot of, I would say, transient in a way, right? Native New Yorkers who have been born here and lived here like I am. I've never lived anywhere but New York City in my whole life, versus people that are coming in from other places. It's really difficult for people that are residents of New York City and the surrounding counties to achieve home ownership in this area because of the affordability.
Wow. Do you see
Yeah.
that for changing in the, the near intermediate future? I mean, no. Wow.
I don't, right? New York
Wow.
City is New York City is the center of the universe. If you're not
Right.
from New York, you want to be from New York. So people
Yeah.
are coming
Yeah.
in from other places because there's job opportunities.
Mhm.
People are not leaving because our families are here. And that's even with like departure market. A lot of people in other places, when they retire, they will go someplace warmer or more affordable, or sometimes even back to the countries that they've come from, right? With that immigration and migration move. In New York, this is just anecdotal, right? If you're a native New Yorker, you don't leave. You're here forever, right? A lot of people are like grow up in the houses that their parents grew up in. A lot of this multi-generational householding that's going on. But now maybe we want to kind of leave the nest, or we want to buy something for ourselves. It's just really hard because the inventory isn't there. No one's leaving, and it's really expensive.
Wow. That is something, Tony. It is unfortunate, right? I mean, it's just not the same process as it was, 30, 40 plus years ago.
Correct.
I
And not
mean,
even in New York City, like real estate trends, there has never been a downward dip in New York City real estate. So even in 2007, 2008, after the crash, when the rest of the country was correcting 20, 30, 40% on value, New York, we didn't shift that much. Maybe there was like a 10% correction on home value. And then we just picked right back up. We were not in a housing slump for a very long time. And just anecdotally, right, I bought my first house 12 years ago. I paid $315,000 for my house 12 years ago. And I thought that was a lot of money. That same house if I were to buy it today, it would be $650,000.
Wow. It's double.
Right. It
Mhm.
doubled in 12 years, whereas traditionally you see home values doubling every 20 years. In my market, it is doubling at a really rapid pace. So if you're in New York, right, and you want to buy in 5 boroughs or those surrounding counties and, commuter cities in New Jersey, the home prices, they're just not going down. They have not gone down. There is no market indicator. My crystal ball is telling me that they're just going to continue to trend up. That's just what this market is.
Wow. That's that is it's insane. It really is. And like you said, I really don't foresee it changing either. I mean, this is currently where the market is, and that's just where it's at, right? I mean, there's really no changing it.
Right.
So
And
let's
there are places where development is happening.
yeah.
Texas and Florida, I think, are kind of leading the way with new home development,
Mhm.
the number one destination for new home purchases,
Right.
because a lot of people are leaving the bigger cities
Exactly.
and kind of heading out. Affordability is an issue.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Well, let's talk about that too, Tony, because I know you are licensed in multiple states, right? So you
Mhm.
definitely have a lot of, flexibility to help people, with those opportunities in those states. So let's talk about, some creative loan options, right? Available for buyers with maybe less than perfect credit. What kind of steps can they take to improve, their credit score, when purchasing a home?
Surprisingly, like I don't really focus on the credit improvement portion of it
Mhm.
because FHA has some of the most flexible FICO options that there is, right?
Mhm.
So FHA is like the gold standard of first-time homebuyer loan products, but you do not need to be a first-time homebuyer to take advantage of an FHA product. It allows you minimum down payment 3.5% across all property types. Um, and their FICO requirements are generous. So they'll go as low as 510 on a FICO score.
Wow.
You need to put 10% down. That's the caveat, the push and pull. But to take advantage of the 3.5% down payment, you need a 580 FICO score,
Mm.
which is very achievable.
Mhm.
Even people with below 580 credit, there are ways to get you up to 580. I have access to credit programs that essentially I will ask it, hey, my client's at 510. What do they need to do to get to 580? And they'll review the credit report and say, hey, they need to pay down A, B, C, and D to X, Y, and Z, and the credit will lift. Because credit is like a transient thing, right? It's not static. The score will change depending on your credit usage, the time of month that you pulled it. So even if you think you're having credit challenges, you're probably not, right? It's not as bad as you think it is.
I 100% agree. And this is the importance of working with an expert like yourself, right? Someone that obviously knows the process, someone that can walk you through A to Z on like, hey, these are the steps we need to take to improve so we can get you in the door, right? And,
Correct.
and, and that's ultimately what it is, right? So anybody that's listening to this, definitely reach out. I mean, that's a great
For
resource to
for
have right there.
sure. Because a lot of people think that they're precluded from home ownership.
Yep.
Oh, because my credit's in the 500s. Or some people even my credit's in the 600s. It's not that good.
Hmm.
It's good.
Yep. And they
It's
never
good
make the
enough to get
jump
you
and then they'll forever rent. And it's like you're missing out on opportunities to really build equity and real time long term wealth, right?
a
And
a
it's
hundred percent.
you don't know what you don't know, is what I like to say, right? So,
My manager says that. I like that one too. You don't know what you don't know.
yep.
And just sit down with a professional, a lender that you know and trust, someone maybe that came referred. who will take the time and kind of educate you on what you need to do. There's a lot of lenders out there that will just see, oh, a 510 FICO, a 490 FICO, or something that just kind of doesn't qualify at the time and say, sorry, Christian, you don't qualify. Come back next year. I will take the time to educate you, to let you know what you need to do to qualify. So maybe we're not buying a house now in the next 30 to 60 days, but we can absolutely buy a house in the next 4 to 8 months, 6 to 12 months. And as long as we kind of get on a plan and partner with it, you're golden.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I love that. Right. But the only way to start is to have a plan in place, right? To
Correct.
really get that going and get the wheels turning. Thanks, Tony. I appreciate you sharing that. So let's talk about, because I know you work with, real estate investors as well, people that are looking to invest in real estate. So, I mean, let's talk about some of the, the best financing options that, you work with. How can investors get started, with minimal capital, right? Because we were just talking about, some people they never really start because they let either fear get in the way or they just simply don't know how. They don't have the knowledge. So how about you talk a little bit about that?
Yeah, there's a lot of different investor loan products. Not all banks have them, but they're absolutely out there. I will say, just as a blanket, there's no way to kind of get into real estate investing without some capital outlay. That's just the cost of doing business. Everyone needs to have some skin in the game.
Yep.
We can get really creative with how we qualify you based on income. There's debt service coverage ratio loans, DSCR, where basically we're qualifying you, the buyer, not based on your income, assets, or credit like we would on a regular residential mortgage, but on the cash flow of the property. As long as the rent roll covers your mortgage payment, we'll write it.
Wow.
Right?
Yeah.
Yeah. So you need to have a minimum down payment, and it's 20%. And that's pretty much all investment products anyway, right? Investors, it's a riskier product. So the lender wants to see that you have more skin in the game. And that's how you kind of get to it. A lot of people don't realize there's other ways to leverage that money, especially if you already own a home. You can leverage the equity in your primary residence to now have the capital to make an investment in another property. And it's really abstract. People sometimes don't want to touch their primary residence. They're like, well, this is where I live and this is the equity that I've earned. I'm going to keep it buried in the ground. But every entrepreneur and business person will tell you, you got to leverage, right? You got to leverage credit to reinvest and make money.
Right.
And it doesn't really matter whether you've pulled it out of your primary residence. Let's say you have a first mortgage for $400,000 and we've pulled out $100,000 in equity to kickstart our investment. Now we have $500,000 in outstanding loans. It doesn't matter that it's $500,000 on one property or 4 and 1. It's still $500,000 worth of loans. And now you're able to kind of leverage that equity and purchase another property that will hopefully cash flow for you.
Wow. There's a lot of tricks to that trade, it sounds like, right? But
Yeah. Listen, it absolutely has some risk involved in it. Especially if you're a first-time investor, I think that is a big barrier to entry, the fear. Especially if you're investing in a place that you don't live in. Like, again, in New York, it's very hard to cash flow in New York because of the the cost of real estate.
Mhm.
And New York City in particular is not a very landlord-friendly place.
Mhm.
So a lot of people are hesitant to invest here because it's hard to kind of get rid of your tenants if you need to.
Right.
But you can take that same money and invest in a much more affordable market. But I don't live in the market where I'm investing, so it requires a bigger team, right? You need a property manager
Mhm.
who's going to collect your rent. You need a maintenance manager who's going to handle the everyday, my toilet doesn't flush problems. But it's absolutely manageable and doable. And now you have a portfolio of real estate. We have our primary residence that we live in. We have our first investment property. And then in 2 years, guess what? We can recycle our investment property, pull the equity out of that, and buy the next one. It's like a ladder.
Right. Exactly. There's steps, right? And that's the thing.
Correct.
And the biggest
And
thing, it always circles back to where even we were talking about, right? It's working with a professional that can educate you on these resources, right? And your options, right? And that's the thing. It's, you somebody that is either has never done this before, they don't start because they haven't made the attempt to reach out to somebody that can provide the answers for them, right? So this is invaluable information, Tony. It really
yeah,
is. I feel like it's going to help a lot of people.
yeah, I hope so.
Awesome. So let's talk about, renovation loans, right? I know you do a lot of stuff with some renovation loans and financing on that. So could you explain how those work, right? How renovation loans work and how buyers can use those to, turn a fixer upper into, their dream home, right? They don't want to buy a new construction house or a brand new build. What are the best financing options for those, looking to, upgrade to a new home for a homeowner?
Yeah. And this is again true in my market in New York City. Trick. My catchphrase is buy the worst house in the best neighborhood.
I like it. Yep.
Um, how a renovation loan works is you are financing the cost of your home purchase plus the cost of the renovation
Mhm.
into one mortgage loan. So if we're buying a house for $500,000, but it needs $150,000 worth of repair, and I'll circle back to that in a second, right? We're
Yeah, yeah.
writing one loan for 650. 500 goes to the seller and then $150,000 goes to your contractor to do the repairs.
Mm.
Um, and they don't need to be major repairs, structural repairs. You can take out a renovation loan for something as small as I need new appliances, right? You can finance $20,000 or $30,000 for appliances.
Wow.
And sometimes that kind of is a make or break in this market, right? We're not finding what we want or need already listed or complete. You pick up a fixer upper, and even in my high price market, fixer uppers are absolutely selling below market value to accommodate for the repair that you need to make.
Right.
And you could just finance the cost of it into one loan, right? We don't have to worry about, well, I don't have another $100,000 or even $20,000 to buy the appliances or to finish the floors. It's one loan.
Wow. Wow.
Yeah.
That's incredible.
And
I didn't even know
yeah, and
that.
we're getting another creative option is here, accessory dwelling units, which is an additional living space in your single family home. Like either you have a basement that has an apartment set up
Yeah.
or like a roof raise. It's called an accessory dwelling unit. You can finance the cost to construct an accessory dwelling unit as part of a renovation loan.
No
And now
kidding.
you've turned your single family into an income producing property with an ADU that'll help offset your mortgage. A lot of people are doing that in my market in New York. One, because they need the income. It's an added help in a higher price market. And a lot of people also have extended families that will be coming with them. So they're financing the build out of a separate dwelling. It's wild.
Wow. Guys, I hope you're listening to this. I mean, that there's a lot of ways to skin a cat in this game.
Yeah.
And it just sounds like there's just endless opportunities, Tony. And I mean, it just sounds like you've had so much experience, for all these years being able to put these types of deals together and just really educate on that. I mean, that's incredible. It really is.
Yeah, and not a lot of people know that. Not a lot of
No,
loan officers will think outside the box like
I haven't
that.
heard about these personally
Yeah.
myself. I just haven't.
Yeah.
I didn't know that about New York City either. That is something that is completely unheard of on my end. So that's invaluable information, Tony.
Yeah. Where are
I
you
really
located?
wish we had another hour to talk on this because I know you could do it
Yeah.
with all the experience that you've spoken about. But unfortunately, we don't. But Tony, thank you so much for joining us today and joining the show. Now I'll turn it back over to you. If anyone wants to learn, more about you and how they can work with you, why don't you share a little bit about, how they can reach you and how they can work with you?
You can find me online. I have a personal landing page where you can just kind of click and say, hey, give me a call. And you can follow me on Instagram where you can see all of my misadventures in motherhood and lending. My
I love it.
Insta is Know Your Mortgage Pro.
Know Your Mortgage Pro. I like it. Ladies and gentlemen, you heard it here first. You know exactly where to find Tony. I hope everyone enjoyed the show today. I know I sure did. I gained nothing but value from this, and I know the audience as well, Tony. So again, thank you so much for your time. It is much
Thank you so
appreciated.
much for the opportunity. This is a lot of fun. Thank you.
Oh, of course, absolutely. Well, guys, again, I hope you enjoyed. And as always, we'll see you on the next episode. Take care, everybody.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.